to a very special edition of Mish's Market Minute. I'm Mish Schneider, Chief Strategist of MarketGauge.com, and I'm really happy to be here with you today because we've got something really exciting to show you. For today, you may have already seen it on my charts that I show when I do videos for StockCharts or in our dailies or in interviews I've done with Dave Keller, but calendar ranges are probably one of the most powerful tools to really be able to assess a trend. And particularly in January, the trend trade becomes extremely relevant, and this week even more relevant. And before I introduce you to Geoff Bysshe, I just want to say that StockCharts has been our go-to platform. Basically, since I met with Dave Keller in the Money Show in Vegas in 2018. Since we've been using it, not only have they been amazing in terms of presenting our plugins, including the one we're about to talk about today, but they probably have the most versatile, cleanest charts around. I use it for everything, whether I'm making a presentation for the Money Show or doing a daily or having an interview globally. StockCharts is my go-to. And for you guys, you have such a myriad of options. Not only could you see comparative information like what they do every day in terms of the end of day stuff, but throughout the day with live updates, the charts are easy to follow. They're easy to put in. Expert plugins like, say, from Larry Williams all the way to us. And also really basically, I think the biggest thing about it is how easy it is to manipulate and how user-friendly it is for everybody from the novice to the most experienced trader. And basically at this point now, I've tried a lot of different platforms and I have not seen anything that I find superior to StockCharts. So with that, I'd like to introduce you now to Geoff Bysshe. Geoff and I have been partners along with Keith for a very, very long time. He is the president of MarketGauge.com. He's an excellent educator. He is definitely one of the creators and probably the world's expert on these calendar ranges. So have a listen and welcome, Geoff.
Thanks, Mish, and thanks everyone for having me here. First of all, I have to say that I am definitely extremely passionate about this whole idea of the calendar, and I'm not alone in this. The calendar has influence. Many of you probably already believe this and understand it, but for those of you who may be wondering, think about this. Every time we start a new year, it's a huge reset emotionally for investors and for you in your life. Investors' outlook often changes and frequently changes dramatically. And we're going to show you examples of that in case you didn't remember 2022 and 2023. And if you think about it, the performance benchmarks always change. The market looks at performance based on year to date. So like it or not, everything changes as soon as that calendar flips. I've heard the phrase, it's like an inning in baseball, referred to a month of the year. I didn't make that up. Actually, I got it from Boone T. Pickens, if you really want to know. And if you think about financial reports, they focus on quarters. If you think about how analysts and the media and we as investors think about the year, it's often the first half and the second half. So the calendars are a big part of how we think, and markets are very emotional. But who cares? Like, how is that going to really help us? Well, hopefully what we're going to show you in this presentation is that these calendar ranges, which we're going to start with a really basic definition of the calendar range, which is what we'll refer to as a January high, it'll be a green line, and a January low, which will be a red line, and a July high and a July low. And these are not the entire month. They are formed about the middle of the month. It depends every year, the exact day. And when you look at these two levels, it can give you incredible insight into which way the market's going to go. But the bigger picture here, before we dive into the charts, is that we use these to be able to answer the questions of who should I believe or what should I believe when all these different predictions and projections come out. Let the charts tell the story, and they will do that if you look at these calendar ranges. And when you let them do that, you'll know when to trade, you'll know what to trade. And I think it's going to be really clear when we start looking at these individual charts. So Mish, let's dive right into the charts, starting with the SPYs in 2022.
So as Geoff just mentioned, 2022 was a classic use of the calendar ranges, keeping you on the right side of the market, especially as we look at the S&P 500. So as we started 2022, after we had that rally at the end of 2021 and we had that incredible bullish year, we immediately set the top of the range and then broke down under the bottom of the January range. And even though we had short covering rallies along the way, it really never took out convincingly the low of that 6-month range. And then of course we had that spectacular move down. We got the reset in July, but the January trend never actually changed, because all that happened is, even though we took out that 6-month calendar range high in July, this was a classic bear market rally. As you can see where it peaked, it was really into all the resistance that we had seen back in April. And then as the second half of the year progressed, we did test now back down to that high that we set in July, another quick bounce. The bounces were getting weaker and weaker. Of course, we eventually broke down, had that October low set. We then kind of range bound, and this is also very good information. If you can't get through one of the ranges, the high or the low, that is a good range bound type of situation, and then convincingly broke out of it until the end of the year, of course, when we went back to range bound before we started 2023. Now Qs, we want to show you in 2023. And by the way, I want to mention, look how clean this chart is. I'm not saying you should never use anything else. Obviously, we like to use moving averages, a couple of our other plugins that we have. We like our momentum indicators, our leadership indicators. We like trend lines. There are many, many things you can use, volume, etc. But we did this purposely to show you on a clean chart with nothing but these two lines depicting the calendar range and these candlesticks, how really easy it is, whether you, as I said in the very beginning, like to do more day trading and short-term trading, or you really want to be on the right side of the trend. And here with Qs, it was just beautiful. As we started 2023, a lot of people still very bearish, if you recall, after that dismal year of 2022, took out that calendar range, didn't even get a good clean retracement all the way to it, but it did retrace at least close. And it just continued to trend higher and higher and higher. When we got to July, we got a little bit choppier, as summers tend to be. But then as we started to get back into November and into the end of this past year, you can see we gapped. Look how beautiful that is, right above that 6-month calendar range high, and ended the year well over it.
Yeah, so one other thing I'll point out, Mish, is it's maybe hard to remember, don't switch the chart back, but when we looked at the SPY chart in the end of 2022, it took out its July range high and didn't come below its July range low. But the Qs, as you can see here, did. The Qs was clearly weaker going into the end of the year. So when the Qs came out and broke out above their January range high in 2023, and then didn't retrace back into it, it was telling you that the Qs were now going to be in a leadership position. So looking at the multiple charts at once is another layer, and so powerful. And July, if you remember July in 2023, the media and people were so concerned with, will this market continue to go higher? Well, one of the things that July is so good at is, if you stay below the July high, don't worry about whether or not it's going higher. When it gets back above it, then it can go higher. Until then, you can take a break, and that's exactly what it did.
Okay, so let's move on now to the Russell 2000, of course, my particular favorite index, as the granddaddy of my economic modern family, but also such a classic sign of an index that has given us trouble vis-a-vis not only just in the nature of the price movements and how stuck it's been compared to the SPY and the Qs, but is also compared to the ranges. As we ended 2022, we did try to have this breakout over that July range and got back under it. And then as we started 2023, we showed you Qs. It took out its calendar range high, as did the Russells, but it didn't really go very high from there. So you might have been able to get in thinking that this might change its trend, but as Qs never broke back down below the 6-month calendar range high, IWM did, and then eventually tested the lows here of the 6-month calendar range low of 2023. But look at the 6-month calendar range low of 2022. It never broke below that. So having these historical data of the ranges also sometimes can be very good for looking at support and resistance. And of course it chopped around. So it kind of told you right here, Qs were flying, and this wasn't necessarily the place to be. Even as we got closer to July, it never was able to really take that out. And then with, again, you saw that gap up we saw in NASDAQ. This took a little small gap, but it didn't really go very far. It failed. So now you could see the contrast of what happened in NASDAQ versus this. This really got weak. And as we got into the end of 2023, we had that great sell-off in the small caps. Eventually we bottomed out here. And then as we got into that beautiful December rally, we got back through. You can see that now you had a really good opportunity to say maybe this has just been too lagging for too long. And then of course the nice breakout we had as we got into mid-December. And now what's so interesting is we have a little bit of information here for 2024, but we don't know exactly yet whether the January high and January low are in, but that's exactly why we're finding this so exciting, because you're about to find out. Now, we wanted to give you a little bit of a historical data on the Russell, and Geoff, please feel free to chime in here, but we're going to go back here to 2019. Geoff, you want to?
Yeah, so if you remember the chart from a second ago, it was pretty much a mess, as Mish was explaining. But if you look historically, when the IWM trends, the rules can be as simple as if you're above the green line, it's bullish. If you're below the red line, you're bearish, and expect that the market is going to find resistance at these levels. And that's how you identify where the market might pull back to or where the market might break out from. And if you look at even IWMs, which we're telling you in 2022 and 2023 that they just weren't ready to trend based on the way they were acting around these levels. Look back in history, it works here too when they're trending.
Yeah, I mean, and this obviously was the COVID crash, so look how clean that was. And then in 2021, obviously the growth stocks were still the place to be, but even the Russells finally took a really nice rally at the end of 2020 into 2021 when obviously all the QE was starting to happen. So there you go. But really, again, you know, in 2022, it's been negative and we're still waiting for this to be the next trend changer. But until we see it in the calendar ranges, you know, stick with what's working. Which brings us to gold. Now, of course, I love trading gold. I've been trading gold forever, but in particularly the last few years since COVID, gold has been such an interesting instrument in so many levels. It's still relatively undervalued, obviously, if you take a look at growth stocks in particular. But again, 2022, we had this sell-off. And then as we got into the end of that year, gold started to rally, even though some of the other instruments hadn't. So this was definitely not only an early reflection that maybe rates were starting to top out, but also it was becoming a little bit of a flight to safety. So as we got into 2023, we started out strong, but then we broke down a little bit as we were stuck with some nagging inflation numbers back here. And so the fear, of course, that the Fed was going to raise the rates, but it doesn't even matter. Even if you didn't know any news and you never listened to news, you could just see with this gap lower, gold was going to have some trouble. But again, look at how beautiful it was from the July range from the past year to the lows that it had in 2023. This is where we started buying it back again because we could see the support was great, the gap up, then we took that out. And even though it hasn't had quite the spectacular moves of some of the other instruments, it has been really telling you that, okay, maybe now time to step aside a little bit, another one of those fake breakouts. And basically choppy, which is what gold has been until we got to the end of 2023 when we finally had that nice rally. And again, I'm so excited to see what the January range will look like, because I think it could be as simple as, if this time near these all-time highs and a January calendar range, we get through it, it might be a pretty obvious follow. And if we can't get through it, then it might be just telling you that gold's not the place to be.
I can tell you that the way I'm going to look at gold, and I'm not as passionate a follower as most people, it's really easy now. We're going to get a January range, that low. If we're above that, I can be bullish. If we get above the high, I can be really bullish. It's going to be a major monthly breakout. But below it, I don't have to listen to what anybody's saying. I don't want to be involved, because I don't have to wait very long for a high relative to the January range to be bullish. So won't even bother.
Yeah, and actually, I mean, if, in terms of, I've traded around a long position that we started at the end of December based on the calendar ranges and added here. But I've added even more. And so quite honestly, based on what Geoff is just saying, even I, Miss Gold Bull, will probably get out of the position if it breaks down under that calendar range low, and then step aside and wait to see what happens.
It's easy to know when it's going back up, when it breaks out.
Well, here we have classic, right? So this next slide, of course, is really showing you what gold looked like if we go back to 2016. And the idea, without having to go through year after year after year, is just for you to see how well these calendar ranges have worked with gold. When we broke down, we went all the way down to the top here in 2016 of the prior calendar range. We got back out. Look how narrow the range was here, but we tested the low, broke back out, retraced, established a new one. This was 2018, pretty choppy. Then we wound up with that taper tantrum here at the end of it. And here we went on and on, chop, 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 until we got into the end of 2019, of course, the COVID situation, and then this spectacular rally. And really since then, this has been such a great indicator. In fact, if you look at all the highs and lows over this period of time, really basically from 2020 until 2023, gold has had its breakouts and its breakdowns, but it's really been kind of stuck range bound. So to Geoff's point, it's going to be super exciting to see what happens with it as we're getting.
Yeah, there's another pattern here. Maybe I'll talk about it later, but it's a stepping pattern. So we look for other patterns that these ranges make. And so the interesting thing from the bullish side of gold is that, unlike prior to 2023, which was kind of sideways and a mess from range to range, if you look at it, we're stepping higher. So if it goes higher, it's got the good bullish step higher pattern to it.
Absolutely, and that's why you're seeing these crazy predictions in gold, like 3,000, 5,000. I've seen it all, but you don't have to listen to that, as we just said, over and over. So now, obviously, the biggest factor maybe for some people would be what happens with the interest rates, and TLTs have been a great way to gauge. These are the long bonds. And again, some history here. There's the step up that Geoff was talking about as we went from 2018 to 2019. Obviously, here was the big QE, the ZIRP, zero interest rate, huge rally. And actually at the beginning of 2020, as we saw, as I showed you even with IWM, so many of the indices breaking down, we saw this breakout, and we just were really basically long the TLTs going into COVID. But as you can see in history, as we got into 2022, even though we got chopped around here at the end of 2021, people started to realize that we can't keep or sustain these low interest rates. Here was that classic sell-off. And again, a little bit of a short covering, but we really stayed very, very much in a bearish trend in the TLTs. 2023, again, people were just so uncertain what the Fed message was going to be. And then people got nervous again about the Fed obviously getting more aggressive to the upside. And now again, here we are. So it's going to be so interesting to see. Forget about what they tell you that they're going to cut. They're not going to cut higher for longer. You'll be able to see, I think, with the calendar ranges pretty clearly what the next steps of the Fed is going to be.
Another big pattern to watch out for, just quickly, at beginning of 2023, you'll notice it spent the whole first half inside the range. That doesn't happen very often. When you get something like that happening, expect a big move whichever way it breaks, and we definitely got it.
Yeah, and the longer something trends within a trading range, the longer the more powerful the breakout or the breakdown is, as you can see here when it finally takes out that range. That's something I really watch for establishing positions. Now, Apple had also, again, in 2023, as it started the year after the disaster, it actually outperformed the market for a while here in 2022. But then it became range bound at the end. People were very uncertain about what to do even with this spectacular growth stock. But then here we go. As the Qs were breaking out in 2023, so was Apple. I mean, you couldn't have gotten an easier long position. I mean, literally from just under 140 to its peak up at close to 195. This is the kind of stuff that traders just dream of happening, and this told you what to do. And now, of course, it got a little bit dicier as we got into 2020, the second half of 2023, that gap down. And since then, Apple's been under pressure. We had that one move here along with the end of year rally, but as we're getting into 2024, Apple's going to be a really good one to follow. Notice this calendar range low here so far has been good resistance as we're into 2024. So as we get a new reset, it'll be interesting to see if not only we take out the January high, but we get back above this area of about 184, which seems to 184 or 185, which seems to be pivotal. Now, Tesla is another, so all these charts we're showing you, these are the big movers. This will work, by the way, on any instrument that you like to trade, whether it's a currency, it's a future, an ETF, an index, a particular stock. It works for every instrument. So we're just showing you, obviously, the big ones because they often tend to trend trade with velocity and with volatility. So here's the case here with Tesla. So again, 2022, we sort of had a counter rally in July, but once it broke down back under that July calendar range high and then low, while the rest of the market was really starting to ease up and come back, this was continuing to go down. 2023, we had that great move up as we took it out along with the rest of the market, but it's been the end of 2024 that's been really interesting to me because we broke down under that 6-month calendar range low. We tried to get through it, and in the most recent rally, and by the way, this is when analysts came out and upgraded this stock. Every analyst on the sun was upgrading this stock. We were saying that we think Tesla and the EV space was probably the worst place to invest. And look at how it just got right to test that 6-month calendar range low from last July. And now here we are. So this will be another one to really see what happens as we get to reset and what the next direction of Tesla is going to be.
So I'm just going to point out my comment earlier about July and saying, you know, if you wanted to know if July was going to rally into the end of the year, the second half of the year, just look at the July calendar range high. Here's a perfect example. If you wanted to buy Tesla in the second half of the year, all you had to do was wait for it to take out the July high or at least come back into the July range, and it just couldn't do it. It's telling you there's something wrong with that stock in the second half of the year. That's just the way the market looked at it. And now, January trend trade, I'll talk about that a little bit later. This thing is just a bearish.
It sure does look that way. And the last chart we're going to show you here, I think, is probably maybe the most interesting of them all right now because it's just the hottest topic with the approval of a spot ETF in Bitcoin. But obviously, this is a Bitcoin related to the US dollar. But again, I mean, look how beautiful this is, right? So we got the end of 2022, we were trading underneath that calendar range low. And then you can see here that as we took out 2023 high, we kind of stopped for a while at the previous calendar range high, chopped around. And then once we took those highs out and the prior calendar range high, obviously we did it right here, right away. This is really when it started to consolidate at higher levels. This is what we call an accumulation, like a step up, kind of like what Geoff was telling you before about some of the other instruments. And then again in July of 2023, look how narrow the range was for Bitcoin. That was unusual. So once it broke down under that range, we had that nice little sell-off until again, now look here. I mean, this was another example. First, we got the nice sell-off to the downside after a narrow range, but this move up, I mean, it was kind of a no-brainer. You just bought it. Once it cleared back over, say, 32,000, and it got all the way up most recently after the news on the spot ETF, close to 50, didn't quite get up there. What you see here that you haven't seen in any of the other charts is the 6-month calendar range high and low for January, because this is a 24-hour trading instrument. So this is how timely this lesson for you guys are, and getting the plugin is for you guys, because right now you can see that whether or not Bitcoin breaks out to new highs or has to have more correction, we'll know that very, very soon, right, Geoff?
Yeah, not only that, it's lining up pretty nicely right now with 40,000. So in and around there is going to be the low of the correction with the January measure.
Well, actually, I kind of lied to you, because it said that I had no more charts left. But well, I'm sorry. You know what? We'll have to cut that out.
Yeah. So this, I'll take it from here.
All right. So okay. So after
unless you want to say something about Bitcoin.
No, you just said that 40,000. So you should cut it after you say that, and every what I just started to say, and I'll just say after you said the 40,000, and just keep going on to the next slide and take over.
Yeah, but you probably should transition to me. So I said 40,000, and then why don't you say, all right.
I got it. I got what to say. Okay, so after you said 40,000. Okay, so we hope that really kind of gave you a good brief idea of just how simple and powerful these calendar ranges are. Geoff's going to show you now how you can put it on your charts as a StockCharts user.
All right, so as Mish pointed out right from the top of this presentation, StockCharts is amazing when it comes to making things simple. So getting these indicators on your charts is as simple as, one, having ACP, and two, buying our ACP plugin. Now we've got a couple of them, and the one we've been talking about is over here on the left. It's called Opening Range. We've been talking about 6-month calendar range. You'll see monthly there, you'll see intraday there. I'll talk about that in a second. But all you have to do once you have it is select it, and it'll pop right on your charts. So there really isn't much of a technical introduction that's needed. So before we wrap it up, I just want to give you the opportunity to be able to not only get everything that we've shown you here, but in addition to the ACP, which will give you the January and the July ranges, as I just pointed out, the ACP will give you monthly ranges, and it'll also give you the opening range for an individual day. Now that's a lot of stuff. And in order for us to even cover the extent to which calendar ranges can help you, we've got a course called Calendar Ranges Training and the January Trend Trade. Now you're going to get that as part of buying the ACP when you decide to do that. In the past, the calendar range course has gone for as much as $1,000, so that is a great deal. And we go into great detail of all the things you can do with it, because as you've seen me pointing out, these 2 lines are just the start. It goes way beyond just 2 lines drawn in January and July. You heard me just say earlier that there are different patterns, the step up pattern, looking at how one market is trading relative to its ranges versus another market trading to its ranges can tell you a ton about which way the overall market's going to go, and whether you want to be in Tesla or Apple or any other instrument. And when you use it on a monthly basis, it's not the same as the big ranges that we're showing you, but it does the same thing in terms of tells you where you can get in, where you can get out to trades. It also has what I refer to as the January trend trade. And the January trend trade is literally a focus on which way is January going, who do we want to be focused on in terms of stocks, ETFs, markets, and jumping on the trends that start early and being aware of which ones are failing and have the opportunity to do reversals. With the January trend trade and the training, there's specific rules for entering the breakouts and reversals. So all these lines we just showed you on the chart, they're as easy as that to use, but we do get specific on exactly how to get in, how to get out. All you have to do is go to marketgauge.com/stockcharts-ranges. That'll let you sign up to let us know that when you get your ACP, we'll be able to give training and some other bonuses. Should be really straightforward. If you've got any questions, feel free to reach out to us at marketgauge.com. We've got live chat on all of our pages to help you in any way we can. And I'm really excited for anybody who has never seen this stuff before, because it never ceases to amaze people the more they look at it. Keep it simple, you'll be impressed. Thanks everybody for your time.
And I just want to end by saying thank you, Geoff, for joining me today. Thank you guys for listening. Know that in addition to any of the information that we can send out to you, I, of course, continue to do my videos for stock charts, whether it's your daily 5 or these Mish's Market Minutes or my interviews on Final Bar, or even with my daily blogs. I will constantly refer back to the calendar ranges as they remain relevant, along with, of course, some of our other plugins and other types of good old chart analysis that we've done with the use of the Stock Charts platform. So thanks so much for watching, you guys. Have a great day, and bye for now.